Hi everyone, Brian from Bearable Traders here. It's the weekend. It's Saturday, July 1st. It's Canada Day here up in the north. And happy Canada Day to all our Canadian traders out there. And I know we got July 4th coming up, Independence Day. And of course, this will be a shortened trading week. We've got Monday, which will be a half day, leading into Tuesday, which of course will be a day off. So it'll be a very shortened abbreviated week of trading, but nonetheless, we're going to take a look at what happened last week and then take a look ahead and see what we got coming up for this second half of the year. Okay, so let's start out and take a look at what happened last week. Just quick week in review. The PCE price index, that was probably the most significant thing that happened. What happened on Friday came out, showed inflation, continued to cool, and the core inflation pretty much came in as expected. So on that note, the markets really took off on this last day of the second quarter and into a long weekend, or sort of a shortened trading week next week. Maybe a little bit of window dressing by fund managers. If you think of some of the stocks that have performed really well, all these fund managers want to show that they have a lot of these hot stocks in their portfolio. So some of the hot stocks got bought up, like Apple, new all-time high on Friday, and strong right into the close. On a sort of a more sour note, I guess, for inflation, the labor market did continue to show strength as we got an unexpected drop in jobless claims. So that showed the employment picture still very strong, probably not something the Fed wanted to see. But anyway, regardless, we got really buoyed by this PCE data and markets just took off. So Dow, pretty much all the indexes up, especially the IWM, which really did the best of all the indexes. Small caps on sort of expectations that maybe we are going to get a soft landing after all, sort of debate on that. Real estate and industrial sectors, interesting, were the biggest gainers on the week, and there were no losers. There was communication services and healthcare, which put in the smallest gains, but really couldn't find a losing sector in the bunch. The treasuries were up a little bit, the 2-year up pushing 5% here, which again shows more expected rate hikes, which the Fed has told us. And the 2-year and the 10-year was up just a little bit there. Dollar slightly up on the week. And Bitcoin, a lot of volatility this week, up and down on some, the BlackRock ETF news. But again, it finished pretty much off the week flat. And so that's how we traded on the week. And as always, before we start looking at some specific charts here, I'd like to do a quick plug for my book on Amazon. It's there, Profiting as an Active Trader, Strategies and the Routines of an Active Stock. And I got a little bit of option trading information in there as well. Or if you really want to go back to basics and you're just starting out, I do have the other book called How to Swing Trade. So there it is. Then let's move on to some charts. And as usual, we'd like to start out with the treasuries, the bigger market, although the stocks are really, when you think that the treasuries get up, especially when they're getting up around 5%, that's not a great thing for stocks, because usually that gives you another alternative for investing. If you're going to get 5% for your money, almost guaranteed, why not be in treasuries? And that's usually draws money out of the market, but doesn't seem to be having that impact. But you can see here how the 2 years creeping up. This isn't really a surprise. The Fed, Powell keeps saying, there's at least 2 more rate hikes there in the offing, so more rate hikes to come. But the 10-year just, stalling out here. And again, this kind of indicating that we still have backwardation, what they call backwardation, which is the short end of the yield curve is longer, there is higher, it's yielding higher than the long end, which is presumably a sign of pending recession, because in the future they're thinking they're going to have to lower rates, so that's why the future rates are lower. But again, we still are sort of churning in this range right here, right now. Again, geez, almost, it's over, almost, it is almost a percent difference. So, and the transports had such a great week here, just took off here and really just ripped higher, which again, just bodes well for economic activity. I think part of this was the The travel trade, a lot of the airlines did well this week. The cruise lines, CCL was up quite a bit. Here's your transports on a weekly. We are right into an area of prior resistance here, so I'd be watching for that. But again, could be some effect of the managers looking to beef up the looks of their portfolio. So it looks like they've been holding names that have done really well. And again, here's the Dow. We're right up into an area where there was some prior resistance right here in the middle of June. Just come right back up. Pretty good volume on Friday, actually. And again, yeah, on the weekly, we are right into an area where we've had lots of resistance in the past. So that's kind of an area we'll have to be watching next week. Although again, shortened trading week, probably really light volume next week. The Qs right back up at this mid-June high, pushing right back up again on volume on Friday. Nonetheless, we had some big volume coming in there again, maybe some portfolio dressing. The Qs, again, just sort of same story right up at mid-June high. The SPY, same story here. Almost seems like we've started a breakout on the daily on Friday. Bit of a breakout here, but again, we're into an area where there was lots of resistance back here. So maybe we take a breather after this hot Friday and hot week. The IWM, you can see we came right up into an area of prior resistance as well from mid-June, but then we backed off on it during the trading day. So this is not a particularly bullish sign when you end up closing lower than you opened. On a week, we are coming up into this 190 area, which is resistance. But again, if we do decide to break out, then 195, then 200 could be some areas to watch. But I think momentum is all moving in the right direction when you look at the stochastics, the MACD and RSI all turning up, and it's looking fairly positive. This is the market that's lagged, the IWM. So this is the one I'd be watching to perform better than maybe some of the other ones which have already been on a tear. And again, here we're down. We had a bit of a volatility reversal doji candle here, like it came down on the low, tested this low from earlier on, and then we bounced back again. So maybe some people are buying some protection or hedging some of their gains now that they've had such a good first quarter. And the dollar, again, down on the day, but on a week overall, just sort of put in a higher low here. Kind of seems like it's maybe just hanging around in that area for a while. And of course, Bitcoin had a big run up previous week on the ETF announcement, and it's just really volatile this week. Like, look at this this one candle here, huge doji indecision candle there. And on a week, we're just sort of stalling out. And this is, of course, an area where we've had resistance before, back here, and so we're just stalling here. But I would be watching that 31,000 level, because if we do manage to break out there, 35,000 could easily be the next level that Bitcoin gets to. And of course, a lot of it is going to hinge on whether the SEC allows BlackRock to go ahead with this ETF that they're proposing. So what have we got to watch and what am I holding? Let's take a quick look here. I made a joke in the room on Friday. I got into some calls, some 200 calls on Apple. I thought it looked like it actually is going to go to 200 next week. And so I'm holding some of those, but it does look like it's so close to 200 now, it could easily get there. This, of course, crossed the $3 trillion valuation on Apple last week, and I think it was 190.70 was around the 191 was around the level where it crossed the 3 trillion valuation, and a lot of portfolio managers definitely want to have that in their fund when they start showing their results and what they have in their holdings. AIs are really, so I've been watching this one. It did bounce off an area where it filled the gap here. This is a typical gap fill, but it bounced back up. And despite the fact that we had a really good day on Friday, when a stock behaves like this, can't hold a gain and ends up pulling back, that does not bode well for a move higher at this point, and volume pretty light on AI, so I'd be careful with this one. I'm not really seeing a trade there. Amazon, again, sort of an AI trade, but this one looks, on the verge of breaking out here. Series of higher lows, and this pullback here, again, higher low. So we are on the verge, or very minimally breaking out here already here on Amazon. I'm watching some of the materials sector because the materials seem to be doing quite well. CCJ is one of them. This is a uranium trade. Uranium, obviously, energy play. And not a lot of volume on Friday, but performed pretty well over the last couple days here. 32, obviously, in a big area of resistance there. Google, again, not, when you look at a market like we had, this is the weekly. Obviously, let's take a look at the daily on Google before we get too excited here. Yeah, not great trading for Google on Friday. When you think of the week gapped up and went higher on most of the indexes, this Google gapped up, tried to go higher and rejected. So this is not a constructive looking chart either for Google. So I'd be careful about that one. It might actually be a good place to sell puts around sell calls around 125 there. KRE, again, this is another stock index. This is an ETF that actually did not behave well on Friday. So still some concerns about the banking sector. We thought, just think about what kind of a day we had on Friday, and we actually gapped up and sold off and ended up lower than the previous day on the KRE. So I am still short some 42 calls on that one, and they'll expire another week or two. Netflix had a great day on Friday, but it looks like this 450 level could be an area where it'll have some challenges, and it's going to be interesting because there is this writer's strike that could be happening. Or no, it's the actor's strike. So anyway, another strike in Hollywood, which might have an impact on Netflix, minimal. NVIDIA, again, this 400 level seems to keep holding here. There is a theory when the first 6 months of the year, when a stock performs really well, the back half of the year is not as good. And you can see here we have actually kind of topped out on NVIDIA. It really isn't making much movements here. So again, a good argument for maybe some call sales and put sales, just to take advantage of the fact it would be trading in a range. SDGR, again, broke out on Friday. I have held this, not holding it now, but wishing I do have it. Maybe if it pulls back to sort of 48, I'll set an alert, get back in. I think I had an alert set on that one. Let's back up. I did actually have an alert set on this one at 40.50, and it came back here last week, and I missed the alert, unfortunately. I just was tied up, didn't look at my phone till later, and the stock had already bounced off that level, and I just missed getting into that trade, unfortunately. Tesla again, really big run up. Again, this could fit into that category where you have this big run first half of the year, and then latter half of the year it kind of stays in a bit of a consolidation phase. So I'll be watching this one again, opportunity to sell puts and calls for just a churn. Again, material sector looking kind of interesting. X is one I have been in, and it's had a good little run back up. I think that's on the sort of China maybe investment in their infrastructure. And that's about it. And let's wrap things up here, July 3rd, as I've already mentioned, of course, Monday, shortened trading day, Tuesday, July 4th holiday. Happy Independence Day to all you Americans out there. And this is your levels, support and resistance. You can see we're pretty close on the Dow to another area of resistance. Same with the Qs. IWM looking to break out here. I'd watch that one particularly, given the strength last week. Again, economic data, not a lot going on. We do have ADP employment report here on Wednesday. That'll be interesting. The FOMC minutes in the afternoon. That actually should be 2 o'clock, not 2:15. Jobless claims as usual on Thursday. ISM services report and another employment report with wages, hourly wages on Friday. This would probably be the most interesting one. We're looking at those hourly wages and making sure they're not growing too much. Again, a really light week on earnings. We've got Albertsons and Levi, but again, pretty light week overall. So we'll see you Monday morning if you're going to join us. If you're taking an extra long weekend, taking the Monday off and then Tuesday as well, and then joining us Wednesday, maybe we'll see you Wednesday, but if not, Monday we will be in the room trading the market at 8 o'clock, pre-market show starting, and look forward to seeing you there. Bye for now.